Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Thursday, June 2nd. Still, it's like I got to remember to say June. Crazy, crazy. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, the CEO of Keep Trading Simple, Brian Caprice. What are we going to be looking at today? Really, it's the headlines. They're very clear. If you see them, oil's on the move. We got the OPEC Plus meeting that is going on today, and we do have Saudi Arabia talking about potentially upping oil production. There's a couple of reasons that they're being cited out there. One, that as they see economies open up and they can couch it within the Hey, Jen. Good morning. They can couch it in the framework of there's going to be increased supply. I mean, increased demand, increased demand. There are also stories that they're doing it to if Russian output slows, they're prepared to pump more. So we do see oil down. It was down a lot more. It popped about 45 minutes ago to take back some of those losses, but it's still down. So we're having volatility in oil. We're also going to talk about natural gas because that inventory level, we got oil and nat gas inventories today because of the holiday. And the equity markets are on the move as well. Looking to try to open in the green. We've clearly had volatility over there. So energies and equities is what we're going to be talking about. Before I flip it over to Brian and we just take a quick peek at those headlines, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And if you want to get a quick peek at what I was talking about, oil clearly down some, got down below 112, still crazy expensive. But then right at 8 o'clock, there was this little pop. So we are going to take a look at technical levels over in oil because it will be moving around today. All right, Brian, I'm going to flip it over to you. Let's take a look at what, the couple of those headlines and then hit energies and equities. And I think that's what we got for today.
Yep. Hold on one sec.
Put and Jen.
Yep. Well, it's Jen's birthday. She's 4 years old today. So
oh my,
she's a birthday girl. Yeah, she ran into me instead of she has her special birthday dress and her birthday tiara and everything. But I guess she came to me first instead of just going to get dressed today. So anyway, yeah. So oil news right now is kind of, I know, right? 4. It's like, where the heck did 4 years go? Is it your birthday? Yeah. How old are you today? 4? Yeah, she's gonna be shy now because she knows people looking at her. So we just had just a few seconds ago, actually, the JMC recommended 650K increment for July. So what they're doing is they're starting to produce more. And again, this is there's a lot of different, obviously, pressure out there. China, they are starting to kind of loosen up, and that was the main reason they said that they were holding to that lower number around that 430 to 450 range. In reality, again, if you look to see what the original agreement was that as of last September, they would start increasing by 432 barrels per day. And that's been continuing forward. And the pressure has been to raise that. And they went up a little bit and they went up a little bit. They said, we're not going to get involved in politics. And it raised up a little bit. And they said, we can't. China's locking down. They're one of the biggest demand factors right now. That we can't really do much. China is unlocking. They're lifting their lockdowns right now. The big threat was that Beijing was going to lock down, and they didn't. They locked down certain parts of it, but as an overall city, they didn't follow the same path that they did. And the original kind of major area, obviously Shanghai, those restrictions are being lifted. They're slowly coming off. So again, the demand story is getting bigger. So it's great that they're raising it. Again, 650. It looks kind of like a big number. I mean, it's from the 450 to range. Yes, it is a little bit more. Is it probably enough? Probably not so much. So now we have the JMC increasing it, as well as we still have the Strategic Oil Reserve release out there. Right now, oil is actually popping off of that news and going a little bit higher. There's not actually, it's funny, you look at it, there's not actually, if I, click to refresh the hottest stuff, you're not actually seeing Saudi Arabia's name pop up here. I know that Todd was able to find some information on it, but you're not really seeing it kind of come over here. Remember, they are part of, they do have, it is I don't want to say conglomerate, but it is an alliance of oil producers. So, one nation can say that they'll produce more, but overall they have to, it's in the guidance and in the bylaws of what OPEC does. So, it is great that OPEC Plus actually did recommend higher. And again, a lot of this banks on, Russian production, not Russian sales. So if Russia continues to produce at the rate they do, if people don't want to buy it, that's an entirely different story. So we'll kind of see where this one goes, but it is interesting that they have raised it. And right now, oil is popping. We do have an oil inventory today, and the API report that we got from yesterday, where is it? They were calling for just a very, very, very slight down draw of 0.06 million barrels. It actually came in higher than expected at minus 1.1. Now, Forex Factory right now is calling for a -3 down draw to inventory. Okay, so it's a lot different. If it comes in just a little bit as expected, again, still a down draw on as far as this goes. I would actually be surprised if this does come in negative or even more negative. One of the stories that we heard last week, and again, extremely important, we're going to start seeing it now in the inventory reports. It's a lot of people changing their habits. Are like, well, listen, based off of gas prices, people are changing their spending. At the same time, we're having conflicting because airlines are doing because people were flying instead of driving. Using going on cruise ships and things, and a lot of people that were traveling like, yeah, we would normally just go to the mountains and drive here, but we're just going to get on a plane. It's easier. I don't have to worry about the plane.
Well,
the plane ticket
and the
increase was not
cost is the cost is going to be about the same when you because the filling up your tank, you're going to drive somewhere. it's almost cheaper to fly, and you're going to get there in half the time.
Yeah, I mean, and that's a perception, how much am I going to pay to fill it up? How much am I going to pay for a flight? Great, the flight will take me there in a few hours. It's going to take me 16, 12, 20, whatever it is, hours to drive,
and it's going to cost the same.
We did see
right?
it. Yeah, so. And the same thing. It's like, I'm going to go on a cruise ship where everything's paid for. If I'm paying this much anyway, I might as well do it because it's going to cost me that much in hotel and just gas. So
yeah.
We are going to start seeing, a lot of it here. And again, remember, we are in summer gas time. So as far as how to trade this today, I would say, based off that oil inventory number, there's a couple of reasons. This could be spiking up, getting ready to short. Bringing more supply on that is great. But at the same time, there's a negative intonation on this too, because they said before, we're not getting involved in the politics aspect of it. We're focusing. And what they said is if the production goes down, remember, China was what was holding them back. So is this a sign that they believe that China's demand is coming back online? Again, that can be taken two ways. One, it's great there's more production there, but are they keeping up with the demand that China is going to start bringing in this equation? That could be why we're starting to see some spikes in here as people are looking at it. So we'll see. Very interesting scenario. We're seeing it pop now. We know it's an oil inventory report. It is a day off, so we'll kind of see how that rolls. Some of the other data from this morning, and actually, let me get this the yellow up.
Jobs.
That's confusing. Yeah, jobs. Now, ADP non-farm employment. This is not the big non-farm number. But this was a very, very big miss. It's less than half. So that's kind of a big deal. It was quite a miss, and they adjusted it lower last time. So it was actually a lower kind of scenario. It was expected to be 250. Now, does this mean that we're already in a recession? Remember, the biggest problem that the Fed is saying right now is we have, and again, we saw the JOLTS number. The JOLTS number yesterday was big, much higher than expected, right? 11.4, but we only have 5 million people trying to get jobs. At the same time, look at today, we're not hiring the people. The people don't want the jobs that are out there. So that throws a whole nother kink in everything. You can say, is it working? This is people that are getting hired. This is not people that are looking for jobs. And the problem is there's the job openings is higher than what the demand is. And now people aren't even taking the job.
Although there's also, I know, if you're paying attention to, if you look at some of the tech sector, there is a little bit of a shift. Because companies are getting punished from the grow at any cost. You're seeing some of these tech companies that were growing extremely, just higher. They're backing up a little bit because companies that aren't also focusing on profits are getting punished. So there's it's coming from different angles as well, where there are some companies that were planning on hiring and that have simply are taking a pause and waiting to see what happens with the economy and with the markets. So you got there's other things that factor here too. So yeah, I kind of see it as we're still growing. We're not growing as fast, and that might take a little pressure off the Fed. I don't know if we're not running so hot. I know that the economy still looks great though, right? Consumer spending.
Yeah, all the economy data looks good. And again, I don't know companies holding back. I mean, the only data point we have, which is has to be considered fact, is showing us that we're slowing down a little bit, but not as much as what they had originally had hoped or what they had forecasted. And then again,
Yep.
seeing a number this far off, this is a very, very big miss when the number's half of what it's supposed to be.
Yep.
Again, when you see
and they revised down.
Right. And there was a vision down. So, and again, unemployment claims, they were good, so it's not like people are getting laid off. I mean, that's the important thing is we're not seeing that. That's what we see in a recession. So, yeah, another different kind of kink in the whole kind of equation in this, we'll see. And then again, Messer speaking later on today, talking about the economic outlook in Philadelphia. And again, Philly manufacturing has been good. So,
Cool.
Overall, I think we're pretty decent. And again, remember, this ADP non-pharma is not like the official. That's not the real big one. That one is tomorrow. And the crazy thing is that's actually expected to be even a little bit higher. Average earnings are up, and then the unemployment rate is supposed to come down again. We'll see if that unemployment rate is still coming down. I would love to say, hey, listen, this is set up for a great Friday this week. But right now, if that ADP miss is a foreshadow what's going to happen with the overall non-farm, and we don't lower the unemployment rate down, again, the market has already factored in a drop in the unemployment rate. If it stays up 3.6 and this number misses, that's all the negative ingredients we need for a red Friday. So right now, the currency market is tomorrow.
That's tomorrow morning before, right before we go live. So
so this is very, very big data. And one of the things too, seeing the numbers today and kind of what it means. One easy way to look at this also is to go over and look at the dollar. The dollar is not necessarily liking it, so it's kind of like it was already moving really from the overnight European session down. The question is, are we going to find some dollar strength back in here, and how are they going to interpret the data? Originally, when this first came out, when the data came out for the 8:15 data, if I drop this down to a 15-minute chart, if you look at it right here, here's the 8:15. It really didn't do much. You would think, hey, wait a second, it's slowing. They're going to hold down. Should have just crushed the dollar, meaning they're not going to raise it. And it's slowly going down, but it's not moving that fast. Typically, something like a non-farm number, even for just ADP, I mean, ADP is a big number and it kind of foreshadows it. You would see a bigger spike in the dollar because right now, everything that happens is about how do we control inflation? What are we going to do? We're going to raise the dollar faster, slower. This didn't really tell us a whole lot. So, it's mixed data today. I would say be careful with it. Going and looking at the indices also, I mean, this is a 15-minute chart. The indices are like, what do we do with this? I mean, it didn't, and this little red one right here is that candle. It didn't move at all. It's already up from where we closed yesterday, but it just kind of stuck there. So, one thing I wanted to point out yesterday, we knew we had that news coming in, after we spoke at 9:30, right where the open is. I talked about traps. That's what these black lines are, the overnight highs and lows. I think we're definitely in areas here where we can do kind of the same thing, right? We have one here, and then again, I would say this one's probably a bit lower. Probably all the way down here is where we're looking at this one. I would say right now, watch out for the same type of traps. There was a trap here and an absolutely monstrous run to the downside. NQ also came up and actually blew through and grabbed the level right in time for news, and then also got just obliterated. YM did the same exact thing. It popped right above that Globex high, and again, this is the strategy they tell you works. As soon as it goes above the Globex high, go long.
Yeah,
got obliterated. Came all the way down to the 32,600 that we talked about as being the target, and we've kind of rallied back up, and we're kind of sitting probably on this one right in the middle, right? Yeah, we're sitting right at that 50%.
Yep.
And there have been sellers sitting right here, so be cautious of that one. And then Russell at the same time did the same exact thing. Now, here's a Russell knockout that we kind of were talking about yesterday. At 9:30, it literally popped up and grabbed an area that was tested in the past. We didn't quite get to where the entry was from before, but as you see, test, we drove that across. Right at 9:15, it came up. You can see this is the ideal situation for where you're looking for knockouts. We knew we had blockbuster news yesterday. It drove right up. The risk was very, very tiny on it. Blew all the way through the bottom side to take you out, and it's literally sitting right where kind of we were ended up at 9:30 yesterday at the close of that candle. So I'd say watch out for this one as well. Again, sitting kind of right there at the 61.8. The Globex high and low on this one is probably about the same. And again, I'd say watch it. There's a little level sitting right there that we've already gone off of. That could be, if we pop up, that could be something. And then vice versa, you're kind of, bracketed in here on the bottom side, at least for the Russell. So again, drop it down to a 15-minute. See what the price action looks like in the next 30 minutes from that 9 to 9:15. Yesterday, any of them, I can use any of them here. Look, here's 9 o'clock. Right there is that 9 o'clock window when we were talking. I said, hey, let's just see where we're at. What did it do? We knew we had the 9:44, the 10 o'clock news. It literally drove up right before the news, and when the news came out, it collapsed. We said yesterday, it's kind of like somebody knows something because it literally drove on every single chart. It drove right up just for it to collapse immediately back down. Again, ES, same reaction. drove up, drove up, drove up, drove up. News came out, boom, right back down again. So, and again, trapped a lot of retail traders in there. So, same thinking today. The only other one I wanted to point out, and again, it's kind of an education piece,
Oh,
is
you're gonna do that one? I was
yesterday
gonna
with the
say that
dollar.
last.
Yeah, a second. Here's the Aussie dollar from yesterday. This was also one that we mentioned was going to be great because of the data yesterday morning. It also drove right up into a zone at 9 o'clock. Here's a knockout. The knockout did not get taken out. The knockout came down to here. So we talk about having profit targets, and this is one of those things that I wanted to make sure we cover. Had you got into this knockout yesterday and just kept it and said, yeah, I'm just going to let it expire. I don't know. It'll do whatever it wants to do. Well, guess what? You're back into the danger zone where you're about to get stopped out on the top side, and you let all this profit evaporate. So again, this is why it's important to have a profit target when you set your trades. Don't just rely on the instrument to take you out. Look for technical levels of where reversals actually could come in. There's your 30-minute right there. And we mentioned this is probably where you're going to run into it, and that's exactly where it kind of came down and bounced. So profit target, and I was looking at this with my group yesterday. This one had $16 worth of risk in it at one point. $16 worth of risk when we mentioned it, and came all the way down and got within six pips of being stopped out on the other side.
Yeah.
So big movement. Now, CL, again, obviously you're starting to pop. It is basing a little bit right now. I think this one is important. Obviously, we knew the 120. And again, if we run it down, you can see the 23.6 didn't really hold much back. This level right here at 114.66, it was a bottom. It hit it, and then kind of broke through. And there was actually kind of a touch. If I extended across, there was kind of the touch over here as well. So there could be an argument it made 3 or 4 hits. We did have a parabolic move. We are basing in there right now. So I would say that this has the potential for a reversal right now. Especially the more headlines we hear about this. I'm sure this is something they're going to tout. Oh, look, because of political ties, we were able to kind of get it done. Natural gas, unfortunately, is higher. It is up 2.87. And again, the Europeans did start to take it a little bit higher. We did have a zone, and again, 1, 2, 3, 4 is what hit, and then it kind of broke. And again, we kind of expect that. You can see actually 4 hit and pulled back again. From this level right now, it did just go right off the 61.8, pushing back down. There is natural gas inventory today. It is a little bit trickier to play than what oil is. But right now, if you look across, besides a magical force number of 61.8, there's not really a whole lot of technical sellers sitting over there. So if this is just the profit taking from the European session and then the pullback, this has the ability to go higher today. And I hate to say up to 925, but I think we can get up to 925 if we start to catch buyers down here. And again, we know that we have pretty decent buyers right here. And again, that's coming in right around 875-ish, right around 875. So again, any pullback inventory is just the same. But again, it's going to be more probably headline dominated than anything else. And we haven't seen anything else, but I'm sure they're going to be talking about that most of the morning, because that's kind of going to be the big news. So,
all right,
that's it for the day.
All right. Well, with that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also accessible. We answer our own emails. If you'd like to reach out to Brian, his email is support@keeptradingsimple.com. Please, if you got questions, feel free to email Brian. I am also accessible, todd.rich@nadex.com. A quick recap of what we just discussed. We are seeing volatility with crude oil as the OPEC Plus meeting goes on, and Saudi Arabia proposing upping output to make up for
OPEC
lost
Plus.
production. Yeah, and
OPEC Plus.
OPEC Plus. What did I say?
You said Saudi Arabia.
OPEC Plus. We'll call it OPEC Plus.
Bigger group.
Bigger, yeah. It's the whole group.
Yep, the whole group.
For real, it is. We've also got those oil inventory and nat gas inventory reports later this morning. The link is in the chat. And we're seeing some volatility in equities as everyone tries to digest what's going on with the economy and what the Fed might be doing coming forward. With that, happy birthday once again to Jen, who ran to Daddy in the morning. I love that.
Yeah.
And Brian and I'll be back tomorrow morning. Remember, we do have that non-farm payroll number before we start tomorrow morning, so tomorrow's session should be interesting. So in the meantime and until then, thank you so much for joining, and good luck in the markets.